What's up, everybody? It's John. I just wanted to make a quick video on some trading setups that I've been seeing because a lot of people have been asking me just, how are you figuring out your trades? How are you figuring out where and when to take your trades and different stuff like that. So I wanted to show you guys something. Right here is a Great British Pound US dollar chart. Now, this pair just seems to show me a lot more the types of things that I look for before I take trades because I do it a lot different than other people because I come from a traditional currency trading background. Like right here on this chart, I would trade directly from this chart, trade different lot sizes and things like that, which I still do, but it's not about that right now. I just want to show you how I take uh, what I read off of this chart and kind of put it into binary trades, because all a binary is a vehicle for trading currencies or stocks or whatever. It's simply a vehicle. All trading's the same, so you're going to based off the same charts. All right, now what I'm going to do, I guess, is I'm going to screenshot this so I can draw on it for you. This is a simple Great British Pound US dollar chart from the past few days. So let's screenshot it. Then I can draw on it for you guys to show you more what I see. All right, here we go. This is what I'm looking for. I'm looking for things that are outside of the ranges. A lot of times when they go outside of the ranges, they'll form like W's, like here, and M's at the top. And all this is it's the bank desk going in and like here, start off with this. They'll run this price down, and what they're doing usually here is they're hitting stops. People that put stop loss orders, say back from here, and they'll run this price down and hit old stop loss orders, and what they're doing is getting liquidity there, right? So let's go back to this. So they'll go down here and they'll get liquidity here. They're hitting stop loss orders. They're taking those stop loss orders, because people that are trading currencies, the masses, they're putting stop loss orders in, usually 20 to 30 pips beyond their entry. Okay, and sometimes a lot closer. Sometimes they don't need to go that far out. Okay, and what they'll do is they'll come down here and take all the stop loss orders. They're getting liquidity doing this. They're running the market the opposite way they're going to run the trend that night, and they're getting liquidity for the run up. And you can see once they have that, they just kind of coasted up, went back down a little bit, and then just bam, look at this. These are 15. This is a 15-minute chart, so each bar is 15 minutes, and they just wham, 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 all the way up, right? And I think this was London, okay? And during London, they did that, and then they ran up and they pinned the highs, and then they see how they pinned the high a few times. This is throughout the night, and I think at the New York Open, they reversed the market back in the opposite way. But look at this. Just look at them pin the high, pin the high. They're trying to attract new longs here, right? Making them think that the market's still going to go up, right? Then there's enough longs trapped here, and so say people were in, did think the market was going down, okay, and they took sell orders in here, right? Well then, once the market clears this, they probably move their stop loss down, or their stop losses are already tight. What do they do before they run the market down? Look at this. They let it kind of go down, but then they run it right back up one more time, and look at this pin. The market was only there for a second, but all these people's stop loss orders are now taken. Look what it does just a few bars after. Just bam, 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 goes down. So what happens is they take all those people's stop loss orders. They've got liquidity for that move down. Bam. Basically screwing everybody that knew the market was going to go down, but they went and took their orders. Now they're too freaked out to reshort, most of them, and they go down. So this is all I'm looking for, is times that the market goes outside of the range, bam, up, and now outside of the range again to go back down. And then, of course, this is the boring part of the day, but then you can see another example here. They go outside of that little range. It's a new day. Okay, so it's outside of the range because it's a new day, the 29th. Okay, and it goes bam, outside. So probably some people shorted here, right? And they said, no, screw that. We're going to take their stops. So they ran up, bam, pinned it, and then all the way back down just in one bar, bam. And then you've got it again here. Look, and it just goes right back up in the other direction. W, and then slam, up, up, up. And this is the same thing here. See these two bars here? This is called a railroad track. Some people may call it something different, but this right here is a railroad track, and all that is a smaller version of this mess right here, right? Because they just slam it up and then slam it back down instead of just going back and forth and trapping traders and taking stops. They'll just do it all in one move right here, 2 bars, bam, bam. And I mean, you can see right here, it just, you know, to prove to you, I'm telling you the right thing, is just look how perfect it is. I mean, they stop the bars right in the same area. You know, it's just crazy. It happens every day, and I wanted to show you this in the Great British Pound US dollar because it happens here most, and it's a lot cleaner than other pairs. Because sometimes, you know, there's different forms of this, but especially too when you run this stock way up outside of the range and it's ripe for a reversal, your risk is so much less. Okay, especially when you're taking a binary trade. Like, you know, I would enter this trade here or so, and then just put it to, you know, put it for an hour to expire in an hour or so, so you don't cut yourself too close. So you want to ensure that the markets move by the time you get that, you know, that binary expires. So that's all I'm doing with that. I'm waiting for the same trades I would in the regular currency, traditional currency trading, but I am using binary, so I just have to time it correctly, which is I would probably go on this trade here, and, you know, just put it for an hour expiry, so it'll expire somewhere in here, right? You know, and normally what I would do is if I was trading currencies, I would just start putting in sell orders here, and I know to keep my stop losses well out of this range, because especially in the pound pairs, for some reason they always love to come back and take the stops, right? Because people that sell here, say, once the market starts going down a little bit, it's common for traders to just go ahead and put their stop loss order right at their entry price, right? So they're like, oh, okay, the market's down now, I'm risk free, because that's all they care about is being risk free. Like they're not worried because they're so scared to lose their money, right? And, you know, big bank desks know the mentality of the traders. The difference is with the big bank desks, they have the money to move the market. So, you know, when they buy or sell, it moves the market. So they're gladly willing to spend $1 million to run up all this and take all those orders to make $5 million on this ride down, right? So, you know, it's just a simple fact. You know, if I was trading regular currencies, you know, I'd be putting, like I said, sell orders all in here, and you can keep going all the way down. But, you know, that's why the currency market drives so many people crazy, is because it is crazy. I mean, it's just up and down, up and down. But if you know what you're looking for, you can really simplify the whole thing when you can pinpoint areas like this. You know, in candlestick charts on the 15-minute, guys, 15-minute. Always watch 15-minute because it shows everything you ever want to know. You know, I do look at hour charts, but that's only to see what's been going on for the past few days and kind of get a bigger picture. But that's what I do, guys, and I know a lot of you out there have been doing great binaries with short-term stuff, but this stuff, guys, can be applied to anything. It happens in the all pairs. It happens in the New York regular stock trading. It happens in the Nasdaq. It happens in everything, guys, in several different forms. So I hope that helped you. I mean, that's what I look for. I look for extremes in the market, for places to sell when they're at extreme highs, because what happens is when the market's way up here, once they get the stops, there's no reason for the market to be up here anymore. So, you know, that's just everything that can ever be in your favor is in your favor, unless news, you know. And always watch for news when you're taking trades, because news trumps any formation, any odds, anything. News trumps all that, because it'll move the market. It doesn't matter about, you know, basically support, resistance, or non-existent when news is upcoming. So just remember that, guys. I hope this helped a little bit, and feel free to send me a message with any questions, and I'll try to make as many more videos as I can once I see stuff. Thanks a lot, guys.